Hi, everyone. Welcome to another session on financial analysis on some famous companies out there. And look, this is one for all the cryptocurrency geeks and people who love it. We're going to be looking at Coinbase, which, as you know, is the first cryptocurrency exchange to go public. And they did so a few days ago. Now, they initially floated at 100 billion. So stick around because we're going to be showing you towards the end of this video what their valuation is like right now and the fundamentals, i.e. the financials behind that. So Ted, take it away. This is going to be a really interesting one.
Okay, so I'm good to see you, Moeed. Full disclosure, I am a client of Coinbase. I'm not an investor in Coinbase. I'm not sure I describe myself as a crypto geek that you said, but I do invest in crypto, in Bitcoin, in Ripple, in Dash, in Litecoin, etc., etc. So I've got exposure to the crypto world. So obviously when Coinbase floated, we want to go and have a look at their financials. So you'll see now, when we look at most of our US companies, we're looking at what we call the 10K form, which is filed with the SEC. This is actually, we're looking at called the form S1, and the form S1 is the kind of the prospectus. So we need to dig quite deep into this prospectus, and I haven't been through the whole thing in detail. That's what the professional analysts are for. But we're going to whiz all the way down to the actual financials of this company. So you're right that they floated on, I forget exactly what it was, nearly 100 billion. So let's look at the income statement first of all and see whether we think this company is actually worth 100 billion. So here is the company. Now, the argument here is, if you're not sure about Bitcoin, and if you compare Bitcoin to gold, okay, and I'm not getting into that discussion here, but if you compare Bitcoin to gold, then you might compare Coinbase to the person who sells shovels and picks to the gold miners. So there's always that old adage that says, if you want to make money in the Californian gold rush, don't look for gold, sell picks and shovels to the people who are looking for gold. Okay, because lots of them, may find gold and make their fortune, but lots of them won't. But you've got a nice steady income of people just coming up to you and saying, I need another pick, I need another shovel. And I think that's kind of the argument that's sitting around Coinbase. So here is Coinbase's accounts. Now you'll notice that these are in thousands. So we're looking at they're actually in thousands. So their revenue is 1.2 thousand million, which is basically about 1.3 billion. Okay, so they've got turnover of about 1.3 billion, and the bottom line, the net income, is $322 million. So $322 million. And that's pretty good. That's a 25% net profit margin, and most companies would be pretty happy with a 25% net profit margin. You'll notice that they don't really talk about cost of sales because they don't sell anything. This is a kind of a brokerage, so it's all about the transaction. So there's a little bit of transaction expense, and then they've got their technology. They've got to sort of develop the app, etc. They've got some sales and marketing, and then the G&A, the general administrative, the kind of rent rate, all the boring kind of stuff that goes on in a company. So the answer is that they're profitable, and that's all looking pretty good. If we go to the balance sheet, which I think is up here, here's our balance sheet. So we've got our current assets and the total assets. So here's our current assets, and you'll notice that most of the current assets are either cash held by the company or custodial funds. So they are holding funds on behalf of their clients, and they're putting that through as an asset. So if they're holding their funds, we know that they owe these funds back to their clients. So in effect, these two numbers are pretty well matched. So if I open my account and I put in $100, they will say, oh, I've got an asset of $100, but I owe Ted $100. That's all that's saying. So you could kind of split that out because it's not really theirs. So that's the biggest part of their balance sheet, and then they've got a few other bits and pieces, a little bit of property and equipment, and really nothing much to speak of. In terms of the liabilities, there's a little bit of long-term lease liabilities. There's no debt, you'll notice, probably because no one would lend to them because it's too high a risk. And so we end up with the net the net assets, which is the shareholders' funds of about nearly $100 million. Okay, so it's about $100 million of shareholders' equity is the kind of in fact, so about $100 million of shareholders' equity. Now, this is a little bit of a misnomer. So what you'll notice is that the number I've highlighted is really these three numbers added together. So that's the additional paid-in capital and retained earnings. And they have been profitable, and they do have these retained earnings, which is good. But we've also got this number here, and this number here is a kind of convertible preferred stock. And this is a hybrid stock. And is it equity? Is it liability? So I've actually just classified it in as an equity. So in terms of equity, they've got about 1.5 billion of equity. Okay, quick look at the cash flow statement. Let's just clear those drawings. So quick look at the cash flow statement, see how they're doing in terms of their cash flow. Again, cash flow shouldn't be a problem because they're not really they're not buying and selling or making something. So cash is less of an issue. You'll notice that the cash flow here, the net cash provided by operating activities of 3 billion, but that's actually distorted by this number here, which is new clients effectively opening up and depositing money. So again, it's not really the company's cash to use. So I think that's a little bit of a distortion. We probably need to take that one out if we're going to get a clear view on this cash flow. They then got a little bit of purchase and disposal. So you can see they're trading a little bit in crypto. So they're actually it's a bit like they're panning for gold as well. And there's a little bit of financing activity going on, but nothing really to speak of. So I think the answer to Coinbase is it's a nice little company. It's turning over 1.3 billion. It's making a profit of $322 million. It's got net assets, so the balance sheet looks pretty strong. It's got 1.5 billion of net assets. It's not gonna fall out of bed. As long as Bitcoin and other cryptos and other crypto nutters seem to think that these things have value, and as I said, I'm not getting into that because I put myself in that bracket. Then these guys are going to be around, for the foreseeable future. They're first to market. But you know what? That 25% margin, that's high. That's expensive. And as the market becomes more sophisticated, we're going to start to look and say, hold on a sec, why am I paying that much money? Now, I'll give you a good example of this. Go on holiday, and if you take your current account card and you pay for things with it, not only might you get a transaction fee, but you get a horrible exchange rate. And people are starting to get wise to this and think, why am I paying so much in that exchange rate? Why am I paying a transaction fee? And if you go to something like a Revolut, you get spot exchange rate. So I get a Revolut card, I pay no fee for it, and I'm getting my spot exchange rate. Real benefit of something like a Revolut. And I think that increasingly people are sophisticated. So Coinbase, it's one of the major exchanges. There are other exchanges out there, people like Kraken, for example, or Bitcoin. So there are other exchanges, and the fees are going to become a little bit more transparent, and people are just going to go, well, hold on a sec, why am I paying all that money to Coinbase? So when we look at the valuation, and here we can see that when they floated very quickly straight after flotation, it dropped from about 100 billion, I think it floated at, to today's value of about 68 billion. And even at 68 billion, that is still, if you take 68 billion on their earnings, that's over 200 times earnings. Okay, that's expensive. 200 times earnings is expensive. It's all goodwill. There's no assets. So 68 billion on 1.5 billion of net assets means you're not buying any infrastructure. You're not buying assets that back the valuation. You're buying a future income. And for me, for Coinbase, I'm just, and again, this is real kind of finger in the air stuff. So if Bitcoin goes to $1 million a coin and everyone's piling in, and Coinbase has got the advertising right, they're going to pick up a lot of trade. And you and I will have a conversation in a few years where you'll say, oh, Ted, I didn't invest because you said it was too expensive. But for me, this is a bit like arriving in California and walking into the store to buy your pick and shovel, and he says, yeah, no problems, it's $800 a shovel. And again, that's quite expensive. I'm not sure about the picks and shovels, it's just too expensive. I'm not going to get the return that I need.
Yeah, that was really insightful, particularly for a company that's been in the headlines quite a lot for the last six odd days. So love to hear everyone else's thoughts, right? Has anyone invested in Coinbase, and what do you think? So leave your notes in the comment section below. And like all of our other viewers, if you have a company that you would like us to analyze, right? And we've received quite a few now already, and we've published them, then have your voice heard. Leave a comment in the comment section. Tell us about a company that you're either thinking about investing in or doing business with, or even if you have an interview with them. Leave a comment in the comment section below. Like, share, and subscribe, and we'll see you on the next video. Ted, this was really useful as always. Thank you very much.
Okay, good to see you, Moeed. Catch you later.